Welcome, everyone. It's the 15th of December, and me and my colleagues are really looking forward to spending the next 45 minutes with you. Thank you for joining PwC's and Ivalua's webinar about the evolution of digital procurement. My name is Henrik Olsen, and I lead our operations consulting practice in Sweden. With me today, I have two esteemed colleagues, Mr. Staffan Hellberg, a digital sourcing procurement specialist with PwC, as well as Henrik Nyberg, a software wizard and specialist in supply chain procurement from Ivalua. Next slide, please. We will be spending the next 45 minutes covering 5 main sections. First, we'll go through the background and approach of this year's study. Second, Staffan will help us explore the details of the study and some key trends in 2020 and beyond. Third, we'll add some flavor and perspectives on some potential futures areas to focus on. And fourth, our friend Henrik from Ivalua will take us through and talk about the role of systems and tools that they play now and also in the future. And finally, I'll wrap up and we will open up for a Q&A. Next, please. Two things. In order to keep track of your questions, we ask you to please use Slido during the presentation. You can see the QR code here on the screen. There's also the logon details at the top. Also, throughout the presentation, and I think it's in the upper right-hand corner, you'll see the code that you need to use to get into the Slido. Also, please note that the session is being recorded. However, let's move into the background and approach of this year's study. Next slide, please. So, what we've observed over the past 10 years is an explosive growth within the procurement technology market. It's led to a more consolidated, advanced, and complex market in terms of vendors and product offerings than ever. I think that three things stand out. One, we've seen the evolution of digital procurement solutions moving from a value-added investments to becoming more or less a standard in any procurement or sourcing organization. The vendor market has consolidated with large global leaders emerging, Ivalua, Coupa, and SAP Ariba, to mention a few. Third, we've also seen a gradual shift in users preferring to partner with larger global brands as opposed to smaller local ones. Also, as the importance of sourcing and the adoption of technology and sourcing practices are becoming more familiar with a majority of organizations. Next slide, please. Over the same period, we at PwC and our clients have seen the popularization of this idea of a fourth industrial revolution, where interconnectiveness and also ecosystem and being able to track your suppliers from all over the globe and really having data at your hands is so important. And it's really been driven by this increasingly interconnected and intelligent technology landscapes. And we've been following these trends and developments closely, all the way from back to 2015 and all the way up until now. And I think the results of the survey that we were about to present to is probably some of the latest developments that we're seeing from our clients and the industry as a whole. Next slide, please. From this year's survey, what we've decided to focus on here today are investigating 7 key questions related to the area of digital procurement. First, what are the strategic priorities of purchasing departments or sourcing departments for that matter? How has COVID-19 affected these priorities? How much do companies invest into digital procurement solutions? Are there some that invest in more or less? Also, what kind of digital procurement applications and use cases do these companies focus on? What are some of the benefits from implemented digital procurement solutions? And what are some of the lessons learned from some of these transformations? And finally, where do we see the future of digital procurement moving? Next slide, please. For this year's study, we interviewed more than 400 companies, predominantly in Europe, encompassing a wide range of sectors in both industry and services. Out of these, we had 34 that were Nordics-based, which also meant that we could create a pretty unique Nordic cut to our study, something that Staffan and also Henrik will comment on in a minute or two. Staffan, why don't you help us dive into the study and results?
Excellent. Thanks, Henrik. Let us then have a closer look at what the survey tells us. When it comes to the strategic priorities of purchasing departments, cost reduction has become the overriding priority, and understandably so given the current situation with COVID-19, as companies scramble to navigate their way through the crisis to hopefully emerge on the other side in good shape. Sourcing and supplier management, SRM, too has grown in importance, where risk management possibly has given way to dealing with the risks that have actually materialized in 2020 as a result of the crisis, and by that has become less of a strategic priority, as we can see by the graph. Though, despite the pressing urgency of the situation at hand, digital transformation remains, relatively speaking. And many companies through the crisis are seeing the value of having improved visibility, flexibility, and efficiency they provide, or in other cases, learning by its absence. Seemingly, in 2020, focus has shifted to A, cost reduction, and B, the more tactical supplier sourcing activities on the expense of the other strategic priorities. When looking ahead, in hope for a successful introduction of vaccines, it can be expected that the strategic priorities shifts back somewhat to rather resemble the priorities of 2019. It should also be said, considering the probable composition of the audience in this webinar, that a similar pattern as described by the graphs can be seen when zooming in on the Nordics-based companies. When we look at the investment levels, it becomes clear that companies are investing significantly in digital transformation of purchasing departments. The average investment levels varies by company size, as can be seen by the graph, but also between market sectors. And interestingly, 70% of the companies in the survey stated they maintained or increased the digital investments post-COVID-19, whereas 30% stated they reduced digital investment post-COVID-19. When viewing the investment levels for the various industry sectors, the highest investments in digital automation can be seen in consumer goods, chemicals, agri-food industry, and the automotive industry. In service sectors, distribution, retail, technology, telecoms, and banking, insurance, finance are the sectors with the highest investment levels. In the survey that will be published for you, there are separate sections on the various key sectors with the relevant benchmark and concluding remarks. When it comes to implementation, we've seen a positive trend in process automation since when we started tracking this back in 2017. Companies have made more progress, especially when it comes to transactional process automation, procure to pay, than the predicted progress 3 years ago. So when looking at the graphs on the left-hand side, you see the purchasing process automation rate and the increase from 2017 to 2019 and 2020. This goes both for the transactional process, procure to pay, in gray, and the strategic processes, source to contract, in yellow. In the graphs on the right-hand side, you see the actual automation levels compared with the predictions that was made back in 2017. And as said, this we can tell as we have the data on predictions already from 2017 survey, which are then compared to the actual process automations levels as stated in 2019 and 2020. Rather interesting, I think, the actual pace of the automation exceeds the predictions that was made back in 2017. To unlock the most value from these solutions, user adoption is key. Here, company culture, change management, training, upskilling workforce, all comes into play. Furthermore, the functional breadth of the implemented solution is key, i.e. the integration of several modules brings synergies. Companies with optimal or medium deployment have noticed an improvement in their performance to a higher extent than the other companies. This the survey tells us. And the value that is seen is expressed in terms of improved purchasing performance and competitiveness, simplification of processes, improved internal customer satisfaction, and team efficiency gains. When it comes to succeeding in digital transformation and achieving the high user adoption rates that are key to deriving the value from the solutions, we see a few key lessons learned from companies that has been through this journey. First of all, one key emphasis is adapting your existing processes to the digital solution, rather than trying to re-engineer the solution to fit you. Securing internal sponsorship is also seen as a key success factor. Implementation of new digital solutions often affect a broad range of stakeholders, including other functions that may need to interface with it. Securing the involvement from these is as important as achieving strong sponsorship from senior management. Having a focus on change management is also important, and along with it, upskilling your workforce to help them become more familiar and confident in these new solutions. To succeed in this takes both effort and investment. Okay, moving on to look at what the survey tells us about the future of digital procurement. By viewing the current usage on the x-axis and the intent to increase the usage on the y-axis of the various use cases of digital automation within the procurement space, the survey concludes on three distinct groups of use cases. One, fundamental use cases, such as P2P digitalization, source-to-contract digitalization, and data visualization. Those are relatively mature use cases in terms of usage and prioritization in organization already today. Two, use cases under development, such as automation of repetitive tasks and collaborative portal, have obtained some usage already, or the growth expectations are relatively lower. Three, most interestingly though, when seeing to the future, are the high potential use cases as singled out in the survey. With relatively low spread and usage levels today, there is a clear intent of companies to increase the priority and usage of those use cases within a 2-year time span. This, according to the survey, these use cases should clearly be the focus of any procurement department where they can be tested and have the ROI confirmed. Among those use cases, we see risk management, smart sourcing, supplier relocation, and virtual purchasing assistant. And if again, zooming in on the Nordics companies, risk management is ranked the highest in terms of potential use cases. As mentioned in the survey, companies are emphasizing risk management, smart sourcing, and virtual purchasing assistant as the key use cases with strong future potential. Therefore, we thought we would dive into these a bit more and explore what they actually mean and the value that could be derived from them. And starting with risk management. When speaking to clients today, we see the importance of supply risk management confirmed by supply challenges due to COVID-19 pandemic. Organizations lack a comprehensive overview of risks. Business functions individually manage different risk types through different processes and platforms. But historically, there is limited collaboration or integration. Organizations have loads of internal data available, but hardly use them to mitigate risks today. We also see a tendency to focus on supplier due diligence, audits, and forget to manage risks after contract signing. Furthermore, there is a growing number of external platforms available in the market to manage multiple supplier risk types. But we also see a reluctance to properly invest, but supply risk management protects business operations and brand reputation. Digitization provides visibility in the supply chain, delivers process efficiency, and results in risk resilience. And here we see that procurement have an opportunity to lead the dialogue, translating risks into opportunities and financial value. Based on this, we see a clear opportunity of structuring and using the data that is available to manage risks more efficiently. Data relates to both demand and supply and can be seen to be A, company internal, B, provided by your business partner, or C, provided by third parties such as Dun & Bradstreet, EcoVadis, or via blogs and social media even. Digitalization can revolutionize risk management to become a holistic, integrated, and almost automated process. Furthermore, considering risk management historically being a less prioritized area, partly due to manual efforts and labor costs, the automation opens up for new values at lower costs. Considering the heritage and DNA of PwC in relation to risk, this area is of course an interesting one. Smart sourcing, relocation sourcing. New methods and increased availability of data sources also allows for an effective screening of the relevant supplier universe. The concept and the approach is similar, but the purpose is somewhat different to that of risk management. Smart sourcing and future supplier scan based on various leading data sources increases efficiency and provide opportunity to extend reach for potential suppliers. For instance, smart sourcing and relocation sourcing can enable automated screening of candidate suppliers cross regions, ranking and recommendations for selection of appropriate suppliers through advanced algorithms. Furthermore, it can be integrated with a holistic structure to supply risk management and assessments, and also provide continuous risk tracking of incumbent suppliers. For virtual purchasing assistant applications, we are seeing a number of key areas where it can be applied. For instance, user-friendly guided buying or communication with suppliers on invoices.
Very good, and I'm off mute, I think. So what we're going to do here is look a bit at, from a systems provider perspective, what this actually means. So if you move forward one slide, I put some animation in there, which is a problem now that I'm not in control of the slides. So I will try to manage that as good as possible. So I'll take the starting point here in the risk management side. And I think the most important thing when you discuss risk is, I guess, to first ask the question, what risk is it you are trying to avoid? And I think that's where you see much of the trend. As I think Staffan and also Henrik mentioned, was that what we see here short term is a very big focus on cost management, for the simple reason that demand has been weak, and when demand is weak, you strive to save cost. I often like to look at the evolution of spend management by looking at the spend. So if you look at the traditional spend curve, we have this tail spend to the right, the high value spend in the middle, and the strategic spend to the left. Where the strategic spend then have the few number of suppliers, but a large portion of the spend, and then the tail spend, very many suppliers, but a rather low spend volume. As mentioned, the tail spend here is where you typically apply P2P technology, and this has always been around automation, getting catalogs in place, getting digitalization in place, eliminating paper, and basically automate. You don't really care who you are buying from. All you care about is that it takes little effort and don't distract your employees from what they're really supposed to be doing. And of course, you also want to save cost. In the middle there, if you move one arrow forward, we have the traditional source to contract area, where very much of the focus has been around negotiation, around RFXs and auctions, basically to take the relatively high value cost and get the cost down, and of course also reduce risk. On the leftmost part there, the strategic spend, which is the bulk of the spend for many organizations. For a financial services organization, this is very often IT and legal services, but for a manufacturing organization, which we will talk most about today, this is the direct material. Traditionally, this has been the domain of ERP systems, and most people have put ERP systems in to solve the problem around the strategic spend. This has also been regarded as relatively static. What many have discovered with the COVID is that it's not so static all the time. So if you move on one step forward, there is a lot of things to do with this that the ERP system traditionally haven't done. Basically, making sure that you can get innovation in from suppliers, make cost reductions on a continuous basis, optimize lead times, especially when you launch product, make more optimized make-buy decision, and also look at sustainability. Another factor that drives the development in this way is, as was mentioned, that the PTP and STC are relatively mature areas. Most people have implemented much of measures here already. So if you move forward, this is what a system landscape traditionally have looked like. Traditionally, you have the PLM systems to the left that support engineering in their development of products. And to the right, you have the ERP, MRP system that support manufacturing and also procurement and of the strategic products. What you have in between there, or have had in very many cases, is a gap where, for example, when you launch product, the engineering creates their engineering BOM, and then you have a sales BOM and a pure purchasing BOM. But there haven't really been any systematic way of linking these two together. So there has been emails, Excel sheets, etc., even paper used to do this. So you can move one step forward. So what we see is that people have more and more started to bridge this gap because, again, what ERP systems, MRP algorithms especially like is static situations. They don't really like different bill of material variants, etc. But what is happening with the world is that companies typically get many more product variants, either by providing customized products to customers, or also for the simple reason that people are getting more international, and simple products as energy drink, for example, has hundreds of different sales variants that all needs to be launched at some point. So what you can do here is you can, when you launch product, you can automate these launches, which is in a way the next frontier of automation in sourcing and purchasing. You can also put in structured processes to use supplier innovation. Some of our customers mean that they get 70% of the innovation from their supply base. You can make more optimal cost planning when you launch product, do the make-buy decision, do the produce subcontract decisions in a structured way, as well as do the quality management products. If you're in manufacturing, very often you use APQP or PPAP or similar processes. And you can manage risk. We're going to get more into that in the end. But also in the normal, over the life cycle of the product, you also want to optimize the cost. You want to cut cost out of the picture. You want to make risk decisions along the way. And you also, which COVID showed, is that it's very important to be able to scale up and scale down. And one of the trends behind all this is also the fact that the suppliers stands for more and more of the value creation in an organization. If you take 20 years ago, I would say the bigger portion was produced in the production part of an organization, and then you could do initiatives like lean, etc. If you want to do your lean initiatives now, it's more and more about cutting costs in the supplier ranks rather than within your own factory walls. So if we move on. And when it comes to risk, I think in theory, it's very easy. What you need to, the terms very often used these days are time to recover and time to survive. And what you need to make sure is that you can survive longer than it takes you to recover. But there's a big data challenge behind this. So if you move on the time to recover side, for example, it's very difficult to understand. If you have a disruption like COVID, for example, it's difficult to understand how long will that be a problem for you. And the second thing you need to know to be able to tell how long it takes to recover is, of course, what can you do? I mean, if there is a pandemic or a volcano eruption or a tsunami, what can you actually do to mitigate, and how long will that leave you stranded? And next, you can move on. And also on time to survive part, it's also very important to understand what the supply chain actually looks like. So for example, if you have a fire, if the stock is in the same building as the factory, it doesn't really help you. So we can move on. So this is an example to look a bit what the problem is with the data here. Assume that you are the yellow factory located in Sweden. You have two very nice suppliers, vendor 1 and vendor 2, one in Finland and one in Dubai. From what this looks like, it's very fine. But if you start digging down into the supplier hierarchies and the supplier tiers, you may find that supplier 2 has a sub-supplier, and both the sub-supplier and the vendor 1 in these cases have their production located, for example, in Wuhan. So if you only track your direct suppliers, this situation looks perfectly fine. But if you start looking into the supply tiers, you will find that you are actually very, very much exposed to any sort of event in China. So we can move on here. So this is then basically what we would say, what you can do to mitigate this. First step is, of course, to get control of your supply data. Many organizations don't even have the first tier in order. If you have 35 systems and supply data spread out among them, you may not even see that properly. And of course, there's also benefits like being able to use contracts properly to do that. Also, do not automate, but eliminate work. Push updates to supplier as much as possible and use external services to enrich data. That way you can make the data challenge manageable. Move on. Also, create this picture. Again, suppliers can maintain it, and if they don't, you can put them in higher risk score. So we can move on. And also prepare. So if you don't have plans and playbooks for disruptions, it doesn't really help much to discover them. So figure out what will actually happen if certain things happen. I mean, if a volcano happens, there may be no fly zone. If there is an underwater earthquake, there can be a tsunami. How will that affect? So we can move on. And also connect this to the demand side, because again, the purpose of risk management in the end is to avoid revenue impact and profitability impact. So we can move on. What you should not do then is just to believe that you can throw AI at the problem without having the data, because with AI, it's data that is difficult, not the algorithms or the methods. So we can move on. Yes, so if we look at Ivalua, that's what some of our customers does. Some examples is Whirlpool, for example. They have consolidated suppliers across plus 25 ERP systems. We have customers that are using this view you see here, which is the sub-tier supply views to be able to do proper site certifications of food producing sites. We also have a Swedish customer that tracks 7 layers down in suppliers, which give very much granularity. In that case, it's mainly for sustainability reasons, but it's also, of course, valuable for risk. So we can move on. On the bill of material side, which this shows, that's all about tying the supply side and the demand side together. So by keeping the bill of materials somewhere where you can actually connect it to the spend data, you can, for example, use this to speed up product launches. You can also use this to combine the raw material index and also affect or to suggest what pricing updates you do on your sellable material. And if you move on, the next step is then to push this automatically. So we have customers that automatically update customer pricing based on the raw material fluctuations and the knowledge of the content in the components that are produced. So we can move on. And I'm done.
Thank you, Henrik, and thank you, Staffan. Really exciting stuff there for us to reflect on. And I think if there's really one thing or two things that stand out to me there before I head into my summary here is this concept and notion of robustness in supply chain. I think it's something that we're hearing across the board. I'm hearing it from the majority of the clients that I'm working with, and really the need for that interoperability and interconnectedness, whatever that's called. Very hard word to say. And then, of course, that all starts with that pesky, supplier master data that we always struggle to get in place. But it's good to see that we are evolving and that there are solutions out there. But again, it all comes back to this data question, right? Let me move into summary before we head into the Q&A. So really for us today, we try to shed the light of some of the key findings that we have across the board from some of the experience that we've seen with COVID-19 and the last year of what some 400 companies have been through and what they've been focusing on. And I think there's three key takeaways that stand out for you today. Although the short-term focus has shifted to more immediate cost reductions, the long-term focus is still to shift to the more strategic spend, where these opportunities and higher savings potential are really enabled by proper systems and tools, right? Not only through the things that Henrik just showed us, but really to be able to master these tiers, layers, these nodes, and understanding where the either services are coming from, like Google yesterday, for example, with some of the downtime there. That was a scary time for some of those consultants that are connected to Google. But interestingly enough, 70% of the companies in our survey stated that they maintained or increased their digital investments post-COVID-19, whereas only 30% stated that they actually reduced them, right? So there is a real trend there into spending more spare money into sourcing and procurement tools and systems. Secondly, as we concluded from the survey, companies have also made more progress, especially when it comes to the transactional process automation. Again, remember this slide that Henrik showed in terms of where we're moving with spends like procure to pay than we predicted 3 years ago, right? And as Staffan mentioned, it's really around the user adoption there, right? It's making these things as simple as possible for your users. And change management there is really a key factor of getting your organization in line, making the processes as simple as possible. And I really like what Staffan and also what we've seen in the survey, but what Staffan said there is that do not try to re-engineer a standardized process. It's been standardized for a reason, right? So rebuilding it yourself, if you're running a SAP Ariba or if you're running on Ivalua, it's not going to produce any additional value, right? So it's use open APIs or use the kind of pre-configured ways the process is supposed to be running. And I think what we've seen there is that the companies with optimal or medium deployment in terms of adoption have really seen an improvement in their performance to a higher extent than other companies, especially in COVID times with people working remotely, right? So we're not talking about travel spend being reduced, right? That's a simple one, right? But we're really seeing this user adoption coming to life. Third, and finally, future high potential areas like the one Staffan talked about are more elaborate, data-driven and automated risk management. And I think what we also touched upon is really the importance of supplier sourcing and relocation. And if you want to move into these areas, you need to make sure that you have the maturity and probably also the adoption rates across some of the other more simple use cases, but also that the return on investments make sense from the perspective of your specific company and the needs and opportunities that are there for you in the market. And again, there, of course, we at PwC and our friends at Ivalua are happy to help you in that type of work. We can build on our own legacy of working with that. Risk management is very much a part of our corporate DNA. And please don't hesitate to reach out to us if you want to discuss this or elaborate on some of the things that you've seen from our presentation here today. So with that said, why don't we open up for Q&A and see if there's any questions? All right, so I think there is a question from the audience, and I don't know if this one should go to you, Henrik, but why not use the organization's ERP system to manage suppliers and procurement? Why is an additional spend management system needed? I think you touched upon that to some extent, but it's a question that we got. Probably somebody that's heavily invested.
Yeah, no, I think we're not going to replace ERP systems. I mean, ERP systems have their role. They have had and they will have in the future. I think the main difference is, I guess, that the ERP systems, I would say, are more aimed at managing more of a static situation where you have a bill of material, you have a plan, and you execute according to the plan. Whereas we are more geared at managing the changing of the dynamics of situations, basically launching new products, managing the changes in the bill of materials and the changing of the supply landscape. So I think in a way you can say the fundamental difference is that the ERP system is a system of record where you record transactions, whereas we are a system of action where you actually perform your daily work, make sure that everything is captured, and you provide good tools to rather than Excel sheets and email that people otherwise use.
Gotcha. And another question here from the audience, and maybe this one is for you, Staffan. How do you see the role of procurement emerging as we see more AI coming into play? Will we see certain key processes being fully automated, and will we see purchasing staff be made obsolete?
I think AI, there is huge potential in it. However, there are a few development steps yet to be taken to fully end up in a situation where you make your stuff obsolete in that wider perspective. I think there is potential. There are definitely a few select use cases, and the entire idea is to seek to automate the administrative tasks and such, and that is being done definitely by the procurement systems. But AI to be self-guided and fully self-managed, like being an employee, that is yet to come.
Henrik, any perspectives on this?
Yeah, on AI, I mean, we hear it a lot. I think that's, I guess, one of the most common questions, what do you do in AI? And I think generally, again, I think I was into that on my presentation part as well. I think it's generally the data part that is difficult thing to maintain to establish and maintain data that AI can crunch. And I think what you need to remember about AI, we're talking about methods. There is no generic AI existing today. So again, if it is AI or if it's an algorithm, it doesn't really matter to me.
And a question from the audience here on track and trace. And maybe, Henrik, this is for something for you to talk about, and then Staffan, maybe you can reflect on it. What are we seeing are some of the trends emerging there when it relates to sustainability? We've seen some companies making some pretty hefty statements about carbon neutral batteries, and we see the banks talking about having full platforms being or funds and assets being fully CO2 neutral as well. What are some of the movements that you're seeing there, and then some of the conversations that are being held with clients?
I think maybe one of the clearest trends, I think most positive trends maybe, is that when it comes to sustainability, is that people have been more focused on action plans more nowadays than before. Yep. One most important thing, if, for example, you discover, say, child labor, is that you work with the suppliers to eliminate the labor rather than just switching suppliers and push the problem on someone else. So I think the most important, I would say, trend.
Staffan, any reflections on that?
Yeah. I mean, along with the more rigid targets that are being set, and I think that is a positive trend, and that's probably where it starts. The track and trace capabilities, the visibility into what is your CO2 footprint, let's say, in your supply chain, that is of course key in order to be able to measure that and to track that and to follow that and to act on it. And companies are being expected to do that as more and more. I think track and trace also in a wider notion than just the CO2. It's really about the entire complete CSR agenda, the visibility and the type of risk management and tracking that I was presenting. Now referring back to, I think that is one way to actually manage it in a more efficient and in a more efficient way, and also at a lower cost that has been possible earlier with less automation.
Excellent. Let's see if there's any more questions from the audience. No, nothing right now. Well, I mean, in that case, I think that we can move to the, should we just move to the key contact slide? Yeah, this is where you can find us. As we said, the survey and the results will be shared with you after the webinar. The official publication of the survey will be published closer to January. So again, a bit of a VIP treatment for you to having spent 45 minutes with us here this fine morning. Hopefully you found this interesting and it's woken you up this morning. And also maybe there's something more that you want to discuss. Please don't hesitate to reach out. And without further ado, I wish you a great rest of the Tuesday. Stay safe, wash your hands, and Merry Christmas.